any doubt that was raised by the selling in the Dow yesterday was negated today with a strong bullish trading that brought the indexes well back up above the T line, and stochastics still coming up, making the prospects of this continued uptrend, maybe along the same trajectory as this trend right here, a high probability situation. Add the fact that the S&P 500 as well as the Nasdaq continue to use the T line as a support, also putting the uptrend in this trajectory, steady trajectory. Anytime you see a pullback, it's not unusual for the next price move to bring you right back up to what had been the existing trend. This allows for the anticipation that if the overall market is still heading higher and it closes, a price moves and closes right at a resistance level, like we saw in ALGN, that allows the candlestick investor to be prepared for a breakout situation and either be buying going into the close or buying on the confirmation of the existing resistance level not acting as resistance anymore. The same analysis can be applied to Apple. When it did kind of a piercing signal gap up through the resistance level, the next likely target was the 200-day moving average. Today's positive trading, gapping up to the 200-day moving average, even though stochastics were pretty much in the overbought area, indicated that the likelihood of this resistance level to continue to act as resistance was not going to occur, that they were going to go right through that level, creating a very strong price move. This type of analysis, because candlestick signals and charts are graphic, we can see exactly what's going on in investor sentiment. That same scenario had already been applied to Amazon earlier this week when you had the Morningstar signal off the 50-day moving average, making the next likely target the 200-day moving average. But candlestick analysis allows for immediately seeing what type of investor sentiment is occurring at a major resistance level. Here, they gapped up, opened at the 200, and started selling off. Here, they closed at the 200 after trading above it. Next day, they were trading down. Here, they went through and closed above the 200, telling you there was no resistance at that level, indicating there was going to be more upside. These simple factors, utilized with the visual aspects of candlestick analysis, help an investor see much more clearly what's going on in investor sentiment at important technical levels. That allows for the identification of patterns such as a wedge formation, as we see in SGEN, that did a left-right combo, one of your strongest reversal signals, a doji followed by a bullish engulfing signal. And notice that it closed right here at the top of the wedge. Makes this very simple. If they open this positive tomorrow, it's telling us that this wedge that had been forming for the last 2 months has now been broken. Now we have a high probability we're going to be in the next strong price move. Candlestick analysis is merely the graphic analysis of what happens in human nature time after time. The Japanese rice traders have produced 400 years of research or back data for us to identify which signals and patterns are going to create the best price moves based upon strong either bullish strength or bearish strength. That'll be it. We'll see you in the chat rooms.